Good afternoon, ladies and gentlemen. Welcome to this session. It's Identity in Finance, Empowering Inclusive Financial Services. We've got a really great lineup in terms of the the panel. I can't believe the quality of our panel that we've got. It's a dream panel for me. So without further ado, let me just introduce myself. My name is Barry Cooper. I'm technical director at CENFI, the Center for Financial Regulation and Inclusion. We are an economic think tank, uh, economic impact agency based in Cape Town, South Africa, and Kigali, Rwanda. Um, I focus in three topic areas. My research is in payments, inclusive integrity, and digitalization, with ID and digital ID at the core of digitalization. And those three topics over the years, over maybe 25,000 hours worth of research, have started crystallizing different insights. And particularly the more recent research that I'll share with you has almost changed the way that we see what success looks like for our research. And initially, our research was about financial inclusion, making sure that people had access to a range of financial services. So it was driven by people purchasing financial services and engaging in financial services in order to add value. That has changed from a lot of particularly the interplay between these different disciplines. We're starting to see a different picture emerging where the contactability or the accessibility of the individual from the economic system is more important. So it's changed from financial inclusion to economic inclusion and more cohesive markets. Next slide, please. Uh, can you change the slide, please? Okay, great. So our vision of success it involves people interacting with formal financial services and with the ideal credentials at their disposal, wherever they are and on their own terms. And those are important issues because you know we've changed the view of saying it's people interacting with financial. It's not. It's people interacting with the economy, accessing people, and that's a different direction, and that comes from our understanding that we've gained in network effects, particularly from research in mobile money and telecom solutions, where a telecom provider that provided premium services for premium customers went out of business pretty quickly. And the second generation of telco providers that provided a communication service for everyone in the country, but also everyone in the world, really had a lot more utility. And so we've also changed the focus of finances. It's been able to interact with people, particularly at the periphery of the system. Can you interact with people that are lower income, that are rural, that have got disabilities? It's interacting with those people, or the ability to interact with or access them, that is now more important. Um, what we've also seen is that, particularly the last aspect, on their own terms, is becoming very important, and that includes things like data privacy, informed consent, effective redress. So that's been a fundamental change of what success looks like. We're not just trying to push financial products onto people. We're now looking to incorporate people with greater economic empowerment. So, and just at this stage, I'd like to just between these different disciplines, there's these concepts of KYC, CDD, KYC, know your customer, CDD, customer due diligence, and then digital ID or ID. These are very different concepts, and they're very often conflated between digital ID and KYC, or digital ID and CDD. Having a digital ID does not mean KYC. They're very different. Digital ID is the purpose is to identify and verify and to interact with other use cases. Can be financial, can be others. But that's a particular purpose. KYC, on the other hand, is knowing and identifying and understanding that customer all the risk factors around the customer. So it's looking at the risk of that customer, not just identifying. It should include identifying and verifying the customer, but it doesn't necessarily have to, because the fact that the Financial Action Task Force has given us quite detailed guidelines in terms of identity proofing for those that don't have identity. So these are actually different concepts. And CDD, being customer due diligence, is a broader concept, includes KYC, but it looks at monitoring to understand risk for those customers. Next slide, please. So I've summarized 25,000 hours worth of research into 8. I won't expect you to go through 8. These are even just summaries. Let me just go through some examples. The most recent work we've been doing was with IFAD, which is the agricultural arm of the UN. You might say, well, what on earth is IFAD doing in financial services? And the answer is very, very clear, in that rural communities thrive and food security is enhanced when remittances are received and or are accessible by rural communities. And that I think is a vital issue. It's not just about people getting financial services. It's about the impact on rural communities, on rural economies, on food security overall. So in this project, we covered 7 countries. We were given a mandate to interact with financial institutions, supervisors, regulators, and policymakers across 7 countries. We interacted with very many financial institutions, from banks, remittance services, money changers, many. And the insights we got from this really changed our thinking about why is KYC, why are people with identities struggling to access financial services? And particularly, why are informal financial services growing at such a rate? So from the work, we went to institutions, and we also we were able to spend time with some of the people in those institutions. So, for instance, if you chat to a bank teller or a remittance payout person, you say, why are you, on what basis do you not accept customers in? And I'll say, we don't accept them if they don't have the right documents, if they don't have a physical ID card, or if their birth certificate that they present us has been folded for many years and it's worn through. It's not on our list. And our list, if it's not on our list, and if they don't fill out the form properly, and we can't help them, then that's not an issue for us. So, and then you ask them, how many people do you turn away every day? And they don't know. And when we start counting them, it's shocking. It's a lot. Every single hour. It's a big portion of their time is spent turning people away. And every single one of those people that are turned away from the formal system. And some of them come back, yes. They come back with documents, yes. Some of them receive their remittances, but many of them merely abandon their remittances. They don't come back. And why don't they come back? You speak to some of them. Oh, they have to walk a couple of kilometers to the bus stop. They have to borrow money to get the bus. They come in to a physical point of representation. So we're not providing the service where they are. We're providing it at a physical point. And then they are then told they don't have, or their documents don't meet the criteria. It's because the institutions have got this compliance focus. They're conflating compliance with risk. Compliance is a very different thing to risk. And if you comply with things, you can actually run a whole risk. One of the institutions we saw had near perfect compliance. They had photostat copies of almost every single document. But when you do the risk analytics behind that organization is fraught with risk. There's money laundering, there's terrorist finance, there's everything happening in that. But they pride themselves on perfect compliance because they're looking at compliance, they're not looking at risk. Does a granny that's collecting $100 remittance pose an enormous risk to the financial system that we chuck her out the financial system? does the person with perfect documentation that has funds that we don't know where they're from pose a risk to the financial system? And yet we welcome them. So we've got the screening mechanism where we push out the low risk consumers, and we screen in the higher risk consumers. And it's no wonder that's we see those issues. So it's beyond just the identity and the ability to identify and verify. It's about understanding the risks around that and the risks around an identity. There's no such thing as a perfect identity. Perfect identity is a fraudulent identity. There's always risks involved in identifying people. So we need to then move towards an outcomes-based. So we say that applying a risk-based approach, we take proportionate measures to address the risks. We've also looked at, particularly with the last project on the EAC, we did the East African Community Cross-Border Master Plan and Mobile Money Cross-Border Framework, and that has given us a really good understanding of how value flows in a system, and particularly where identity can be either a hindrance or an accelerator in terms of value flowing in an economic system. So what we see there is that often there is this use case focus. So we focus on a use case, P2P. It's typically what happens with mobile money. The first use case, P2P, and it's an isolated use case. What it ends up happening is that they envisage that this ecosystem, a digital ecosystem, will just evolve because we're putting digital value in people's hands. Actually, it's not. It's a dead end. It goes P2P to cash because there's no other use cases or linked use cases to circulate that value back into the system. And from a lot of our diagnostics, what we've seen is that it's so important that this is a whole myriad of different use cases are interlinked. And then we also noticed that the use cases for digital ID and the appropriate use of digital ID and ID, the use cases for payments, and the use cases for financial integrity, KYC, CDD, these are all one. They all support each other. So you can't have ID use cases without the financial component behind it. You can't have the financial without the use case being backed up. So it tells us, it leads us to the point where we're saying you need to totally digitalize a value chain. You cannot have half digitalization. Half digitalization means no digitalization. It means a dead end. So for instance, if I want to send an email and I want it to arrive in somebody's physical postbox, it's never going to get there because that cuts into the digital divide. And what we're seeing now is that the economies are disaggregating into two different economies, a digitalized economy and a non-digitalized economy. And it's getting very, very difficult to bridge the two. The informal sector seems to be bridging the two, but as long as we semi-digitalize, it means that value doesn't flow around that system and it gets stuck, and then it can't flow around. So this is a really, really difficult task for payments and ID providers to ensure that these use cases cover the entire range, the entire value chain, to ensure that it's digitalized. You cannot have a half digitalized value chain. And some of the glaring examples we've seen is that e-money or mobile money ends up in a cash in, cash out scenario. In one country, the cash in, cash out scenario has become an industry in itself. And that's because it's fractured. And what we're seeing is that increasingly the informal sector is growing. And in my country, the informal sector for remittances is now the majority. And once people go to the informal sector, the level of trust is very high. In the research we did in the informal sector, they trust the informal sector, and that trust has been earned. And that for informal sector doesn't mean to say that it's just cash. It's also it's semi-digitalized as well. So getting the consumers back out of the informal sector is very difficult to near impossible because it's a bit more convenient and it's more trusted. So that's in a nutshell what we've been learning from a lot of these. I've gone into there's a couple of other points. Just there is light at the end of the tunnel. What we have seen in one of the banks is that they are using technology to bridge that digital divide, particularly people that can't that struggle with reading and writing, particularly people that have got disabilities. What they did was they pulled a lot of data and pre-populated and took paper out the system. And by doing that, what they've done is they've actually bridged into a large customer base that was previously thrown out the bank because they didn't have the right forms or they weren't filled out properly. And so there is light, and it's about making sure that you've got the mechanisms and you're able to innovate to bridge that digital divide. And with AI looming, I think that bridging that digital divide becomes so much more important. So with that, I think we'll go on to the guest speakers for today. Our first guest speaker is Dr. Seto Kwaba Amadiko. He's the Director and Head of Payment Systems, the department at the Bank of Ghana. So,
Good afternoon. Thank you, Barry. I think you gave a very good background to today's discussion. You really make our presentation, coming presentation, very, very easy. There are some three issues that Barry underlined. I would like to bring them out before I quickly go through my presentation. The first is with regards to people being denied access to financial services based on our financial services providers following compliance mode of operation rather than risk-based. Very important because in our case, next slide, please. In our case, slide 1. Yeah, in our case, the reason why we migrated to digital identity is one of the issues that you identified. We realized that most of our people get to the banks, they get confused. You get to one bank say you need a passport to open an account. Another one say you need a birth certificate. Another one say you need your national health insurance card. So most of our people were very confused. That is one of the issues that you highlighted. There was second issue in his presentation, which I perfectly also agree with you, in terms of giving digital ID to people without not providing other options that they can use this digital ID for value-added services. Okay, I will touch on that briefly in my presentation. And another issue that I pick from your presentation, which is relevant to my presentation, is with respect to ensuring interoperability among systems. Now, during the COVID, I think we all saw that most countries experience increase in digital services because during the lockdown, you don't have the chance to go to the banks or to go to your mobile money operator to go and do financials or do any transaction. So you have to go online to do this transaction. So in 2020, we've seen that our transactions have increased. However, we have serious problem. The main problem was fraud because we don't have a unique digital identity. And most banks and mobile money operators complain bitterly. People have lost their money. And we realized that there was a situation where people are trying to lose trust in the financial system. So in order to resolve the issue, we said, look, we, as a central bank, we need to come together to eliminate all these forms of identification that you need to submit at the bank. In some instances, it's your national health insurance. Instances, is your passport. Some instances, even it is your social security card. So, next slide. So we engage the National Identification Authority. Next slide. We engage it as a central bank. We engage the National Identification Authority, and we decided to have a full-blown digital ID. So the discussion was whether we should have a digital ID for only the financial sector or only for the whole country or for the whole country. I know some countries, they have digital ID for only their financial sector. But we decided as a central bank rather to help the country to have a national digital ID. So we brought in the NIA, which is the identity provider in Ghana, and the East Technical partner called Margins. The central bank said, okay, we are going to help you to ensure that the universal ID that we have been dreaming about as a country will get it done. So we define roles. The NIA was to ensure that governance and the provisions under the identity laws are followed. And the technical partner, which is Margins, is to bring in the needed capital and technology. So this public-private partnership has to work, and the role of the central bank is to ensure that all financial service providers in Ghana use the digital ID. So we have to engage the banking industry to explain to them the need for a digital ID for the use of the financial system. They bought in, and we decided that we'll introduce a digital ID in the financial system. Next slide. So we introduced this digital ID, and we made it mandatory in 2022. That was in May, 1st May. We said that to access financial service in Ghana, you need to obtain a digital ID. And it is by law also in Ghana that everybody must get a digital ID. And we gave 6 months for everybody to get a digital ID. And the public bought into it because there was a lot of education. A lot of people in the past have lost money. So if we tell you that you need to go to your bank or go to NIA to get a national ID card, which is digital, you'll be willing to do that. So we saw that there was public interest in the digital ID, and that paved the way for various services to emerge in Ghana. One of the key things that, novel thing that happened was that it enabled people to be able to onboard onto financial services through remote onboarding. You can be in your house and open a bank account. You can be in your house and open a mobile money account. And we have a situation whereby also with the introduction of the digital ID, there was opportunity, or there's now opportunity for people, especially the unbank, to be able to access credit as low as $1, $5. Because now people can be identified as the true owners of the various accounts that we have. Now, can we go to the next slide? If you look at the main purpose of this session is for us to showcase how we're able to introduce digital ID to facilitate financial inclusion in our various jurisdictions. So if there's anyone here who would like to do the same thing as Ghana has done, it has been a successful story in the West Africa region. What are the things that you need to get right to introduce a digital ID to be used in the whole financial system? The first thing we will recommend is that you need to get your enabling legislation. You must have legislation on AML, legislation on identity, cyber security. So the enabling legislation needs to be in place. If they are not in place, you introduce digital ID, it will not be supported. The next thing also is that you don't go to mandate or tell the public that from today you must obtain a digital ID. Your birth certificate will not count for accessing financial service. Public education is very important. You need to engage the financial services industry, engage the identity authority in order to get in the buy-in of everybody to get it done. Now, next slide, which will be my final slide. Now, with the digital ID, I think the third point that you talk about, which link to my final slide, is that there is a need for various value-added services to be linked to the digital ID. What will it be for somebody to have a digital ID, or in a country you say you have a unique ID and the people cannot use the ID? Now, in our case, apart from the financial services industry, to vote in Ghana, you use your digital ID, your national card. We have successfully done this twice. Our last election was in last year, December 7th. A new government was changed with the digital ID. So we use it for our election, we use it for health, we use it for education. To access university education, secondary school education, you need to have a national ID. So we have seen government services being expanded to those in need. For example, we have a wellback assisted program where the very poor people are identified in the system and they are given a stipend at the end of the month. Through the digital ID, this is delivered to them at the end of the month through mobile money. Thank you very much.
Thank you, Dr. Mudiko. Our next speaker is from an organization that I've been studying for many years. I don't have favorites, but maybe this could be my favorite. It's Premier Owiha. I don't know if I got your name right. He's the managing director and CEO of the Nigeria Bank Settlement System, NIBS. And NIBS has been at the forefront of innovation, I think, for probably decades. Welcome.
Thank you. Thank you, Barry. Good afternoon. I think I start, there's a problem I'd like to address. I'm an African, and the way Barry pronounced my surname require a fine. Normally, we accept a cow in my village. So, Barry, you are owing me a cow for wrong pronunciation of my surname. So, yeah, so there's a fine of a cow. So you can monetize it. I'll give you the picture later. So my name is Premier. I'm the Managing Director, CEO of NIBS, and I'm happy to be here to speak to you today on EKYC, the NIBS strategy, and in Nigeria. NIBS. Can you move to the next slide, please? Okay, so just briefly, I'll talk about NIBS. NIBS is a 32 years old organization. It's owned by all the banks and the central bank in Nigeria. We are established to create interoperability for the entire industry. And we are a trusted national switch for the country, also designated as a critical national infrastructure by the federal government of Nigeria. And it's facilitate cross-border payment. All the financial institutions in Nigeria connect through NIBS to PAPS today. And then one of our major value is to lower cost for the industry and ultimately for the entire citizens of Nigeria. We have done over 50 billion transactions since we were created, and over 4.5 trillion, in thousands, quadrillion actually, of transactions. There are 1,000 connecting entities to NIBS. We provide the instant payment. We were the first in the world in 2010 to create the instant payment, and it was born out of a homegrown problem. And then the PTSA and the NUS, which is our National Universal Switch, 100% built by NIBS and internally. We build most of our systems. The NIP was built, instant payment, and then US built, and then the identity fraud management, which we deployed, and that will lead me to the KYC part. And then we recently delivered the Afrigo. It's called Afrigo Domestic Card, which is meant for the National Domestic Card Scheme, which is currently live. And then we deliver the account-based QR, and then we have the BVN as well as the other identity and fraud management tool called the HOP. Please, the next slide, please. Okay, now, sorry about this. The early development, we had issues with KYC identification. As you know, KYC means you have to be present, you have to be validated, you have to have a means of identification, which is quite different from eKYC. With eKYC, it's electronic KYC, which is digital. You don't need to be present, and it can be done anywhere remotely. We had a lot of manual process, long queues in the banking hall, then lack of KYC regulations, clearly. And one thing that bedeviled the entire industry at that time was lack of financial inclusion. In Nigeria, it was exclusive. You have to have a driver's license or an international passport. That was a problem. How many people can drive? How many people can get an international license? So it was a very low digit adoption in the country. And to grow with the banks, this was actually a bank-led initiative. The bank verification number. To have an account in Nigeria, you require a bank verification number, which is functional. We have a foundational, which is the national identity number, NIN, which you must have. And today, NIMC has actually ramped that up to close to 150 million Nigerians now having the number, which is foundational. But what we now have is the BVN, which is about almost 14 years old now, is functional and restrictive to the finance system. That has helped us to grow the digital transaction, then improve customer experience, and then also to track fraud, and also to help to improve lending, and then lending, and also monitor people's activities in terms of credit bureau and various other benefits that Nigerians have enjoyed. Please, the next slide, please. Okay, now how NIPS currently enable this? We have a consent management in place. That's the subject owner's consent must be obtained, except when it's required by the security services, then consent is not required. So the security services rely on it. This has also helped to fight corruption and a lot of other things. Then the biometric matching is a service provided, so you can go to the ATM today in Nigeria and use your fingerprints to withdraw. Some are also using the facial recognition for withdrawal. Then the identity validation portal, which is available for you to validate anybody's identity. Then the industry database repository. We have a repository for the entire industry in NIPS today. And with your BVN, your KYC is well established, and I can determine how many accounts you have within the ecosystem today in Nigeria. There are 430 million accounts in Nigeria, operated by 65 million BVN holders. But recently, in December 2023, the central bank tiered the system, allowing NIN to be used for tier 1 type account base for those who are in the rural area who don't have BVN to transact. So I think those are the use cases, most of them for online account opening, which has become very, very efficient with liveliness test. Then the biometric authentication, I mentioned that, withdrawal on the ATM, then POS, POS for payment. So either use your face or you use your fingerprint. That is growing, and with that, you don't need card. You can actually go there and then provide either your phone number or your account number, and then match it with your finger, and it goes then. Facial verification is the next slide. So now the strategy for the future is continuous enhancement to the BVN, which will improve the KYC. We are currently with our partners, Demalog. They have a site out there and they are helping us right now to upgrade the system. After over 10 years of using it, we believe that it's time. Most of the things we've learned within the last decade, we now need to bring them on board. Then expand the biometric use cases across the financial ecosystem. There are a lot of Nigerians today who can still not read or write, so they depend on their biometric details, either face or fingers, to transact financially. That we are making possible. And then facial recognition is becoming a very critical factor. At the ATM, some banks are deploying that, activating the cameras on the ATM to read your face as well as liveliness test, and then fingerprint specifically to access your account or debit the account. Then the online liveliness checks, that is going on in terms of a lot of the API being utilized by lenders and various players within the ecosystem just to validate and confirm that you are who you claim to be, which is very important. Before the advent of this platform, we had issues where you can find somebody in your database who has an account, but that account, I can be there, I'm Premier, but I can have another account as Tunde, have another account as John in one bank. So BVN has corrected that. And improved data protection, the data is protected, and then the use of the consent management, which is very important, has also helped, and the necessary regulations and laws are now fully in place in Nigeria to drive the adoption. The financial inclusion and digital literacy. This is one area that I think across the entire continent we all need to deal with. A lot of people are still financially excluded. As big as Nigeria is, with 250 million people, the bulk of our citizens are in the rural area. They are still financially excluded. So incentives, making it comfortable and easy for them. Those who cannot read or write can use their biometric or facial to transact. Then ecosystem collaboration, a lot of collaboration needed with partners. It's not something we do alone with NIPS. Like I said at the beginning, NIPS is owned by the commercial banks and the central bank. So we are constantly in engagement with all the players and also principal partners, NIMSI, that manages the national identity system for the country. We are constantly working together to see how we can improve the lot for Nigerians using the EKYC and also be able to bring in a lot of people, especially now that our federal government is looking at paying people electronically across the country. So you need to be sure who you are dealing with and who you are paying. Should be the last slide. I think that should be the last slide. Thank you very much.
Thank you very much, Premier. I call on our next speaker is Gertrude Padumba, and she's the CEO and board secretary of National Switch and the ID for Africa deputy ambassador. National Switch, I have a connection with it because we did a country diagnostic many years ago, and one of the recommendations was that Malawi needed a national switch, and here we are. Gertrude, please.
Thanks, Barry. Good afternoon. I would like to thank ID for Africa, Dr. Atik, and the entire ID for Africa team for the invitation to come and attend this conference, but more especially for the opportunity for us in Malawi to share our experiences on the impact of digital identification on the financial sector. Oh, okay. All right, I'll start by sharing with you the financial landscape in Malawi. It isn't different from all other sub-Saharan African countries, but in Malawi, when it comes to the financial sector, we have the commercial banks. We also have got non-banks, the likes of mobile money operators. We have savings and credit cooperatives, microfinancing institutions. We also do have the disruptors, the fintechs. And all these are regulated by a central bank, Reserve Bank of Malawi. And Reserve Bank of Malawi is not just a regulator of the financial industry, but they are also a change agent when it comes to financial inclusion and driving digitization of payments in the country. In addition to that, in the financial sector, we do have a national switch. This national switch is an all-inclusive national switch. And when I'm talking about inclusiveness, we're talking about participation on the national switch is not restricted to the commercial banks, but it is open to all financial institutions that are licensed by the Reserve Bank of Malawi. As of today, we have all the commercial banks integrated to the national switch. We do have all the mobile money operators integrated to the national switch. We also have got all the microfinancing institutions, as well as the savings and credit cooperatives and the fintechs integrated to the national switch. We are currently working with government entities, more especially the Accountant General under the Ministry of Finance, e-government, which is also another under DPI. They are responsible for data sharing. We're working with them hand in hand. And the reason why we're working with them is to digitize government payments as well as tax and non-tax revenue collections through the national switch. We are at an advanced level, and we're also working with other ministries as well, like the Ministry of Gender, as well as national local government on finance committee on issues to do with social protection programs, where we're working to also digitize disbursement of social protection funds to the beneficiaries in the country. We're trying to provide with them a G2P, government to persons with choice. When we're talking about choice for the beneficiaries, we're talking about choice for them to choose as to which account their beneficiaries are going to fall into. Is it going to be in the bank account? Is it going to be in the mobile wallet? And that decision is left to the beneficiaries. A choice for the policymakers, it's for them to decide. They don't have to sit down and decide to say the funding for those G2P payments, where is it going to be coming from? Is it domiciled in Bank A or is it domiciled in Bank B? When they come straight through the national switch, that decision, they don't have to make it. It will debit the account wherever it is domiciled, and then it will propagate to different accounts that are domiciled in different payment service providers, both commercial banks and non-banks financial institutions. In addition to the use cases that are available on the national switch, we also have got fast payments. And these fast payments are across networks, not restricted to commercial banks, but we do have account to account interbank funds transfers that are instantaneous. We also have got wallet to wallet and wallet to account and account to wallet. All is facilitated by the national payment switch in Malawi. And now, coming back to the reason why we are all attending the ID for Africa 2025, and that is to do with digital identification. And for us, National Registration Bureau, which is a foundational identification platform, they are the ones that have enabled the financial sector to achieve as well as to comply with so many regulatory frameworks in the country. So we find that National Registration Bureau, it's an enabler of the financial sector in many ways. And we also have, I will not finish talking about the landscape without also talking about Malawi Communications Regulatory Authority. And the reason why I've brought them here is because they are an authority that is also responsible for data protection in Malawi, electronic transactions, as well as cybersecurity laws. And they are also responsible for digital literacy in the country. So they are supporting both the financial sector as well as other sectors of the economy in as far as digitization in Malawi is concerned. Next one. I'm going to give you a historical background on Malawi when it comes to identification. Malawi is coming from a background where we had no foundational or federated identification at all until 2017. And this affected the financial sector because in 2006, the country passed laws, the anti-money laundering, as well as the countering financing terrorism, CFT, in 2006. And you know that when it comes to AML and CFT, the requirements when it comes to compliance, you heard Barry, you heard Dr. Skoa, what he said, to say that it's not about compliance, but it goes beyond that. So with AML, the requirements, some of the requirements were not just only verifying customers when you're onboarding them, but then the financial sector also had a responsibility to make sure that they put risk management, robust risk management frameworks in place. So they were taking a risk-based approach when it came to customer management as well as financial transaction management. So I'll just give you an overview of that. When onboarding a customer, before you start any financial transactions or business relationship with those customers, there was a need for you to, one, make sure that you verify that customer using a verifiable credentials. This is when Malawi did not have any federated ID. And then on top of that, even the transactions themselves, when they're happening, you needed to verify the source of those funds. 3, even your own team that you're employing, if they're going to be senior members of that financial institution, you needed to carry out a background check on them, a due diligence on your own staff. And then the fourth one was that even when you are presented with an identification document, you needed, as a financial institution, to verify the legitimacy of that document. And in Malawi, there was no single source of truth. Before you go there, can we go back to the last slide? So in 2007, under the Office of the President and Cabinet, a unit was formulated, more of a steering committee, to start looking into ways on Malawi putting in place a federated identification system. And in 2010, the National Registration Act was passed. That laid the legal foundation for the establishment of the National Registration Bureau under the Ministry of Homeland Security. And from that time, they went to work and started coming up with the processes, planning, designing, scoping for the national identity for Malawi. The beauty of being a laggard sometimes it comes with its benefits, because Malawi moved from a place where we had no state-issued identity straight to issuing digital identity to its citizens. And that came with biometrics as well, because when it came to registration of citizens in Malawi, it wasn't only taking the bio kind of information, date of birth, your name and whatnot, but they also captured all the 10 fingerprints of everyone else, the irises, as well as facial pictures of everyone else from the word go. So coming back to the financial sector, how did we survive without national IDs from the period up to 2017? So as you can see, the financial sector relied on so many documentation to try as much as possible to identify their customers. The official one, and for those like Malawians that had driver's licenses as well as passports, those were at least verifiable. But in addition to that, and for the majority of Malawians that did not have passports as well as driver's license, they relied on endorsed letters from different authorities. Could be your village headman, a religious institution or academic institution if you were a student. And it could have been your employer if you were employed. So you can see that the amount of physical documentation that the financial sector was having to deal with. And as I pointed out, to say the risk-based approach that the financial sector was supposed to take was that you verify not only the customers, but also the documentation that they were presenting to you as for you to verify that they are who they are saying to be. And these were not digital, so everything was manual. We kept files and files and files. If somebody is going to they want to do a transaction, you have to go to the archives, retrieve a file and check signatures, check whatever and all those things. So it was one onerous exercise. So we had so many challenges in Malawi in as far as that were brought about by lack of federated identification. And one of them was to do with driving the initiatives of financial inclusion. I'm going to unbundle that. When we're talking about financial inclusion, we're talking about three basic financial services that everyone is supposed to have in a country. And one of them is savings accounts, being able to save. And the other one is to having access to credit facilities. And the other service is having access to insurance products. Now, we are in a situation where we have got laws that we are supposed to be complying with under AML and CFT Act. And here we are also supposed to be driving the financial inclusion agenda, because during this period, under the Ministry of Finance, they had come up with a national strategy on financial inclusion and digitization of payments in the country. And that meant that even those that were in the rural areas or semi-urban areas that did not have any passports or driver's license, we needed to bring them into the formal financial sector. And the results of this, as you can see, as of 2014, the Finiscope report that was done in 2013 before 2017, when national IDs were started to be issued, we were at 34% in as far as those that were formally included in the financial services. And the reason was that some of the issues that most of my colleagues talked about, the financial sector was wary in just signing up each and every person. It is okay for you to sign up for somebody who's going to have a savings account because they're bringing money and put it. The risk issues are minor. But then when you look at credit facilities and all that, we had people that were actually opening bank accounts in the same in the same bank, or having mobile wallets with the same service provider, more than one, and then they would have credit facilities all over the place. And at the end of the day, okay, thanks. So fraud issues, financial crime was very high at that time. In addition to that, in terms of operational wise, complying to all these legal and regulatory frameworks was high and all that because of the manual work that was involved. We also had issues to do with identification, verification, because as I pointed out, there was no single source of truth. Please move on. So with the digital identification, we managed to deal with all those challenges that the financial sector was facing. And currently, there are so many ways, not only verification of identification of our customers that the financial sector is doing, there's more to it. Even when it comes to registration of G2P and all that, we're working with Ministry of Gender and other social protection agencies to make sure that they use the digital identification for enrollment of beneficiaries. Even on credit scoring as well, as people are using they go about in everyday life, they're living a digital print because of digital identification, which they're going to be using for different transactions, not only financial transactions. And that has provided the financial sector alternative data sources that they can use in as far as the, credit scoring is concerned, as well as to determine the credit history of Malawians or for Malawians. As I also pointed out, we're using it in G2P as well as revenue collections. Last slide. So all the initiatives in the financial sector and where we're also using digital identification is fully supported by the legal framework in the country. The Financial Crimes Act eventually replaced the AML and CFT Act. And the Act actually identifies the primary identification being the digital identification provided by National Registration Bureau. Then the law also still recognizes the other forms of identification. We do have a Data Protection Act fully enacted as well that also determines how we collect, store, process, as well as exchange data. And we also have the Payments Act, that's supposed to be 2016, and the e-money regulations. But the linchpin of all this is the digital identification. Thank you very much.
Thank you so much, Gertrude. Yeah, I've actually seen the National Register. It's superb. It's really well constructed. Thank you, Gertrude. So let's see. The next speaker is Mothetsi Sekwati. Hopefully I got that right because I'm from the similar region. And he's the Director of Payments and Settlements at the Central Bank of Lesotho.
Good afternoon. I'm just worried about the time, but let's hope we can deliver this within the next few minutes. Thank you very much, Barry, and everyone in the room. As been introduced, my name is Muteti Squati from Central Bank of Lesotho. But before we jump into the business of today, something about the first slide. Yesterday morning, we got reports that the Mountain Kingdom woke up to white mountains because of snow. So Kingdom of Lesotho is one of the few countries in Africa that experiences snow. So you're invited to come to the kingdom and do some skiing. Now that you know about the kingdom and the snow, let's jump into the business. We want to share our story of the impact of national identity adoption in financial services in Lesotho. But before I do that, I want to paint a picture of how things were before adoption of national ID in the financial services. So if we can move to the next slide, please. Okay. So as said by many of colleagues who came before me, the picture in the kingdom was such that one could say we had identity crisis in the financial services. Identity crisis in the sense that we were using multiple documents for identification in the financial services. But some of these were a bit strange, I must mention. If you look at things like chief's letter, your driver's license, your voter card, and one feature about this document was that each had its own means of identity. There was no common identity among this document. And some of these documents don't even have any identity of its own. For instance, the chief's letter's identity will be the stamp from the chief, which is not really unique in a way. So this situation really was not really ideal for financial services. One of the problems that we had was actually what you can call financial exclusion. Financial exclusion in the sense that some of these documents had questionable credibility and limited availability to the citizens. And so there was also issues of trust among some of these documents. So, and there was also a burden on the side of financial institutions to ensure that as you onboard customers using these multiple documents, you have to actually keep record of this document and other challenges. So as a result of that, the central bank, in collaboration with other partners, engaged on a journey to try to rectify the situation. And this was informed by certain strategies, which I'll talk about shortly. But just before that, I think it's worth highlighting that maybe we should move on to the next slide. Yeah. So around 2009, 2010, between 2010 and 2015, the Kingdom of Lesotho took a bold decision to actually implement national identity system. And this involved a lot of key initiatives within that program, including enactment of supporting legal framework, stakeholder consultation, and the actual implementation of the ID system itself. And once the ID system was actually implemented, there was an uptake within the public sector on this infrastructure. So, for instance, now the passports that were being issued were linked, were based on the ID system. There were other use cases that were undertaken by the government, like Ministry of Public Service, verification of government employees, and many others. Independent Electoral Commission used this registry for as part of registration of citizens on their platform. And just the picture on this slide just shows the journey in terms of onboarding of citizens on this registry. Around 2015, 2017, that was at the hype of onboarding of citizens on this platform. And this was a big drive by the government. And today, as we speak, this has 90% coverage of the population. And this we're talking about the 16-year-olds and above. So maybe that's just a big background on the journey as far as the government of Lesotho is concerned. But from the financial services point of view, around the same time, the central bank, in collaboration with Ministry of Finance, were also developing financial sector development strategy. And in that strategy, one of the key objectives was to enhance or transform the identity or identity in the financial services, because it was a challenge, as I highlighted above. So as a result, we also engage other development partners. Let's move on to the next slide, please. Yeah, the likes of Finmark Trust to embark on this journey. And at that point, we considered various options. And one of the options we considered was maybe we also need to develop a functional ID system that can be used by the financial sector. But we also noted this major development from the government side of things of having the foundational ID. And we really consider that option of piloting or seeing if we can actually adopt the national ID as an identity in the financial sector. So then we started with the pilot, and the pilot, we took various participants within the financial sector, banks, non-banks, issuers of mobile money, insurance companies, and we completed that pilot in 2019, and it was concluded to be a success. And then we made a decision that the ID then can be used as a means of identity in the financial services, purely basically for KYC purposes. And I think Barry has already given a clear explanation of what the KYC is and CCD, so I won't really go into that. Next slide, please. So on this slide, we just want to demonstrate the scaling up of the verifications with the national ID. So after the decision to go beyond the pilot, then the next thing was to scale up and allow everyone in the financial services industry to adopt this as a means of identity. And this slide shows various parties within the financial sector, the banks, your insurance companies, issuers of mobile money, and other players. But more importantly, recently, the central bank itself. The central bank is an agent for the government for issuing of government bonds and T-bills. And currently, or back then, the solution is such that to participate in this, you have to come to the central bank, fill forms, and so forth. And this is a little bit tedious. So what we've done recently was to actually develop a portal that is linked to the Home Affairs Registry. And this portal enables citizens to actually log onto the portal and participate in these bonds without having to come to the central bank. And one of the information that is required is the national ID, and it's verified against the Home Affairs Registry. So this also shows some of the innovations that came as a result of this development. Next slide, please. So on the next slide, really, we're just saying the use of national ID as a means of identification in the financial services ecosystem has really improved the KYC processes in the financial sector. You know, the whole regulation thing boils down to risk management, and it has actually enhanced risk management in the financial services. And we've really noted a notable uptake by the financial sector, as I've shown in the previous slide. So in the interest of time, we can move on to the next slide. So in conclusion, I want to talk about two issues. The collaborative approach, quite critical. I think colleagues have alluded to this. Colleagues who came before me has alluded to this, that it is quite important to collaborate, to engage key players in this ecosystem and show them the value of working together to achieve these innovations. You know, as central banks, one of the key mandates of central bank is financial stability and price stability. But linked to that mandate is also the mandate of financial inclusion, a very important one. And it's also something that we share or collaborate a lot with our Ministry of Finance. With this adoption of the ID in the financial services, we have really seen improvement in the financial inclusion agenda for many reasons. Colleagues have talked about national payment switch and other things. We've gone through the same phase as well, and many others. Our assessment by the partners over the past 10 years, our financial inclusion landscape has improved to over 90%. So we are really seeing the impacts of some of the and many other initiatives that we have undertaken in the financial system. So with that, I would actually want to pause here also to save time a bit. Thank you very much, Barry.
Thank you, Mr. Hetzi. Just a quick word. If you've got a burning question for any of the panelists, please go onto Slido and make sure it's on Ballroom C, because otherwise we'll have people next door answering different questions than what they were planning to do. So it's on Slido, Ballroom C. Our next guest speaker is Irene Kabura Mariano. I don't know if I got that right. And she's the first deputy governor, the Bank of Republic of Burundi, and an ID for Africa deputy ambassador. Welcome, Irene.
Thank you, ID for Africa, and the entire team here. Good afternoon, everybody. As they said, I'm Irene Kabura Muriano, the Deputy Governor of the Central Bank of Burundi and the Deputy Ambassador, ID for Africa. Here I am to share with you our journey on digital identity as a catalyst for financial inclusion. Next slide, please. Yes, as a country profile, yes, as a country, we are located between Central and East Africa. We have a population of about 12,300,000, and that is according to National Census records last year. And with regards to the key topic, we don't have national ID up to today, but the processes and the preparatory works are underway. We do also have 55% of population which are above 16 years. And in terms of DFS providers, we do have commercial banks, we do have microfinance institutions, and all others spoken. We do have DFS users, such as governments, such as merchants, and the consumers. And in terms of use cases, we have little. We have a predominant which is P2P, and a bit of A2G pay bills. Next slide. Yes, although we have both banks and the licensed non-banks which offers the digital financial service, we still do have challenges. As you can see, we have absence of trusted digital ID, as I said previously, and this hinders access to financial services like opening of bank accounts due to KYC procedures. We also have a challenge of low level of interoperability between systems. We do have also low internet coverage. We have a penetration rate of 22%. We have excessive use of cash and also less use cases and channels, as I spoke earlier. Next slide, please. So to address those challenges I mentioned earlier, Burundi, through the central bank also, is in the process to modernize its payment systems through a project to digitalize its financial sector. The key features of that system will include integration of unique financial ID based on biometrics. The system will be open and interoperable. The system will have the ability to enroll consumers and transact offline. The system also will support all use cases. As we are in the process to digitalize, we launched the project last year, that was January 2024. We got experience from various countries, including Ghana, because you proposed that you were ready for experience sharing. And luckily, November 2024, the contract was signed with a successful bid. Next slide, please. So, since we signed the contract in November, it means that some activities have been undergoing since December up to now. So you can see from January to April what we have done. We have trained project team on what entails the solution. We have done diagnostic of the existing payment systems in the financial sector. Various awareness workshops has been conducted to the relevant parties, the financial institution in particular, and we have selected focal points from all relevant parties. That's from commercial banks, microfinances, electro money issuers, and the remittance companies. We do work together with the presenters proposed. Also, we train them as of to now, like this week also, we are continuing with the various workshops with these focal points. And this month of May, what we are doing, we are continuing with training and awareness to various participants, including consumers, but also we are receiving various equipment from our solution providers. And we expect from June to September to conduct an on-site equipment installation and its associated settings. We also expected during the same period to do pilot testing of the solution. We shall do on 2 modules, that is interoperability and the identification modules. We shall test on 2 commercial banks and 2 mobile money operators. And also during the same period, we expect to revise our regulations to ensure that there is good adoption and implementation of the system. We expect the start of the implementation from October this year. Next slide. As I said, the key module will be financial ID and interoperability. So on financial ID, the central bank is building a system which is stronger, with a stronger identification model for its financial service users. In this, we expect that the central bank will distribute smart POS or tablets that will enroll clients. Each financial institutions, including their branches, will be responsible to conduct biometric enrollment, and no client will be recorded twice because the system has a verification mechanism to detect and prevent double records. The identification module will not depend on any specific database. As I said, we don't have national ID currently. So our current national population registry and the civil registry is not digitized. It's manual. That's why we shall have the digital ID from the scratch. Yeah. So how will we get, or how will someone acquire the financial ID, we do have the local ID, which is not digitized. So a client will come with that identification at hand or anything, as was presented by Malawi. We also do have that. But what will be more on that, the system shall capture the face, the iris, and the fingerprint. Yeah. And also the database will be centralized at the Central Bank of Burundi for issuance of that unique ID. And that ID will be linked to all accounts and wallets. Next, please. So in terms of interoperability, the system will be interoperable through electronic banking, mobile, and internet. And it will also have the ability to support all use cases and all channels. We shall also have a unique USSD code that will interface with the existing USSD codes in any mobile phone. And this will allow everybody to access the financial services. Next slide. So where are we now? The central bank has already secured a solution and is to provide, and we are in our testing phase, as I said. The implementation of the system is expected to start in October 2025, and we expect it to conduct a comprehensive consumer financial education program to drive adoption of the system. We do also have the implementation strategy with its associated action plan. The central bank also will ensure the system is integrated with other regional and international systems. As insisted from the beginning of the day up to now, we shall collaborate with the line ministries to ensure that when they're establishing the National Population Registry, if need be. So we do hope that the financial ID, which is biometric based, when it will be integrated with the national payment system, it will improve the financial inclusion and it will facilitate individuals to access more financial services. Otherwise, I thank you.
Thank you very much. Thank you very much, Irene. We'll take some questions on Slido. My Slido is not actually working at the moment, but let me kick off the questions with first one to sorry. To Dr. Amadiko. So digital public infrastructure has progressed substantially in Ghana. We've seen, particularly with GIPS and others, and now with Ghana Card. I know there were some issues with Ghana Card on the 442 and that, but it seems to be way in the past. Do you see the environment further in evolving to integrate, particularly those that are in rural areas with limited network infrastructure?
Yeah, thank you. I think the question is we have now got a digital ID, the Ghana card, and then a national switch, which is GIPS, meaning that we have the necessary basic infrastructure to scale up inclusion. How do I see it be accessible to especially those in the rural areas? Let me add that the Ghana card is both online and offline. And in our situation also, you are required to be physically present to be verified. The reason is that we want to engender trust, and then based on our lessons in the past where there were various fraudulent activities, we want every financial transaction to be verified. So those in the rural areas, they all have Ghana card. I think yesterday in the one of the sessions, we had the technical provider, they were technical solution provider. And then the first day also, we have an NIA representative that has stated that so far, the adult population, over 15 million adult population have access to Ghana card. So that means is that because every social service in Ghana now, you have to get Ghana card. If you want health, you need Ghana card. You want passport, you need Ghana card. And then you're even every worker, you must have Ghana card to be in the social security scheme. So those in the rural areas also have access to Ghana card, and through the offline mode, they are able to access all these services. And let me add that another critical thing that we are working on currently, which you will show in your presentation, is to ensure that these platforms, now that we have one source of truth, which is the Ghana card, they are interoperable with all government services.
Thanks. Yeah, so the offline capabilities of Ghana Card, I'm not usually in favor of a physical credential, but the offline capabilities of Ghana Card for me, when I saw it in work, it's really well received in areas where they struggle with comms. I think that's a lesson. It's a kind of a hybrid between online and offline, where you can validate encrypted credentials. For NIBS Premier, I know you've gone quite an extensive road in terms of innovation. There's been significant innovations. And what we see in Nigeria, it's one of the fastest growing populations, and particularly youth population, and particularly just in the more peri-urban and rural areas, the amount of financial inclusion tends to drop off. How how are you equipped to deal with the size? It's a massive population. How are you dealing with the size, and what are your plans in the future to get to those rural areas?
Okay, thank you very much. Nigeria is quite huge, with a population of 250 million people across 36 states, 774 local governments, so quite huge. But over the years, we've devised various strategies to deal with bringing the financially excluded on board. At some point, the banks travel. We have the mobile kit, which we go and then register a whole village and bring them on board on the BVN database. But looking at it and the need to scale, the central bank, the regulator, came up with a tiered system of account, tier 1, tier 2, and tier 3, that allow anybody to open an account with some minimal level of KYC. But mandatorily, you must have the NIN, and then you are pegged in terms of financial transaction, maybe 50,000 to come in. Most people in the rural area, I don't expect to have more than 50,000 and so on. Daily transaction limit. So with that, we have people that have been sucked into the ecosystem today. That's why the total number of accounts in Nigeria is about 430 million accounts existing. While on the BVN database, you have 65 million, and then on the NIN database, almost 150 million. So we've been able to use the NIN and the tier 1 series of accounts to get people onboarded. But now to scale up to a full-fledged tier 3 account, then you now need to step into a bank and then upgrade. And so the things we've done also, working with NIMSI, is to ensure that the foundational database, which is the NIN, and the BVN have matching data. So there's a financial authentication service running in NIPS today that help to achieve that. And with a lot more mobile devices also being used for capturing now, that you have people, agents across the ecosystem who are able to capture people's BVN and then send them to NIPS, either online or offline. And that's also helping to drive adoption across the country.
Excellent. So it does. You do have offline options as well. Yeah, and but particularly the tier zero it has been a quite a good innovation. I think it was ahead of its time because a lot of the banks didn't like tier zero because you just needed to provide a name, and the banks didn't like that because of their KYC compliance. But actually, it's very much in line with the FATF's identity proofing guidelines. It's and it was way ahead. No, excellent. But yeah, I know that your job is quite immense going forward, but quite achievable, I think. Yeah. Thanks. Gertrude, just in terms of in Malawi, there was a lot of talk about eKYC, but not just an eKYC that gave a binary response yes or no. eKYC that actually gave data, and that there was potential for data sharing right across the financial sector. Where are we with that? I believe there has been some movement with the banks in recent times.
Thanks a lot, Byron. You are right. In 2018, the financial sector under the Bankers Association of Malawi indeed looked at the foundational identification system. There was collaboration between the financial sector and National Registration Bureau for the financial sector to be able to do KYC, leveraging on the national identity system managed by the National Registration Bureau. At that time, as I pointed out earlier on, that the rollout of registering citizens in Malawi and issuance of digital identification was done in 2017. In 2018, that was actually less than 12 months that the financial sector was already talking about, we want to integrate to the National Registration Bureau and all that. And in the meantime, there was a lot of work that was going on with National Registration Bureau to register citizens and to issue them with digital identification. So the data exchange layer that is required by the National Registration Bureau and the financial sector be able to securely exchange information was not yet implemented. But as we're speaking right now, the National Registration Bureau has gone beyond the no-yes answers when probed for KYC. And they have developed that data exchange layer to the point that when you probe their registries or their databases, it actually brings you all the information that is needed, the face or other information and so forth. Of course, we'll continue to collaborate and to engage National Registration Bureau to ensure that, as we said, that financial institutions are taking a risk-based approach in as far as customer management is concerned. So there is other data that probably the financial sector will require. We'll continue to work with National Registration Bureau to enrich the data that they already have, that database, that data exchange layer that they have provided to the financial sector, to reach to the point that all the information in as far as verification, KYC, and everything else is available on that data exchange portal that has been provided by National Registration Bureau. So it is available right now. Thank you. And Barry, just to add to it, when I'm saying it's available, it's not only where you just enter your national ID number. It is available on biometric as well. So the financial sector can actually deploy scanners, finger scanners and all that. It will still translate into all the information that they need for them to carry out KYC. Thank you.
That's excellent to hear. That's a big step towards once KYC'd, always KYC'd. So that you don't have to drag a whole bag of documents to a financial institution every time you want to change or change your product or do anything else. There might be ancillary documents that you need if your risk goes up, but your base KYC is there, the static data, but the dynamic data can then change. Am I right? Am I correct in the Malawi situation?
There isn't any need for financial institutions really to maintain physical records. in as far as for the information that they need for them to know your customer exercise. And the information, that data exchange layer that I'm talking about is real time. And National Registration Bureau has provided secure APIs that have enabled the financial institutions to develop interfaces directly to that data exchange platform. Thank you.
That's really excellent to hear. With that, just with a successful eKYC and CDD integration in the bag, which is really impressive. What's the next development in Lesotho? Will we see stronger cross-border CDD and KYC movements?
Okay, no, thank you very much, Barry. Maybe let me just start by saying the whole implementation of national ID within the financial sector, or it's anchored within the shared strategic objectives in the country. So this was within the National Strategic Development Plan. And within that plan, there are sectoral plans that actually execute the national one. So this is where the financial sector development strategy is coming out. But within the bigger national strategy, there are cut crossing issues that really underlies the whole strategy. Identity with many other aspects such as cybersecurity and so forth are key enablers in the transformation or digital transformation journey. Now, the ID laid a foundation for domestic use in the financial services. But the other use cases that we are currently exploring, which relates to cross-border payments. For instance, one of our neighbors, and the only neighbor, South Africa, we trade a lot with. We also have citizens working in South Africa within the formal and informal sector, a need for remittances to send money home and other requirements. One of the challenges that we have seen over time was that our citizens were struggling to access financial services in South Africa because of identity challenges. So we have been working with various partners, Finmark Trust, World Bank, to explore the use of ID, national ID in South African financial services, so that South African service providers can recognize our national ID so that they can onboard and enable our citizens to access financial services in that regard. But it's not only one way. We have big projects, like one of our key resources is water, which we export to South Africa. And from time to time, we are continuing with building of dams to enhance the supply of water to South Africa. So you find that there are quite a number of South African citizens working in those projects who also needs to send money home. And that need to assess to be able to use financial services in the country relies on recognition of the IDs of the other system. So we see value in that, but this is still in the piloting stage.
Yeah.
We are still confirming, but there are other case scenarios that relates to SMEs, but under exploration. So it seems like there's really a lot going that we're yet to see going forward.
Well, I'm going to be on the lookout for developments over there, because there's so many cross-border use cases that in other regions that can really learn from your experience. Yeah, thanks for that.
Thank you.
And Irene, just on in building an NPS that has got digital ID built into it, I think you're in a very favorable position because you've learned from everyone else. particularly going into an environment where I know, because I've seen all the different kinds of IDs that are applicable, and probably the lack of trust in some of the IDs. How do you think that the consumers will overcome that and be able to trust that ID as opposed to all the IDs that are currently in circulation?
Thank you. Yes, the consumers will put on trust if the ID, that financial ID, will be verifiable and authenticated. If it can prove that this identity is really for this person. And also, if that financial ID will be safe, if it will ensure privacy saving, and also if it will be reliable. Thank you.
Will it be backed up by regulation or legislation like we've seen in Ghana?
Sorry?
Will it be enforced by regulation? And so in other words, that becomes the only legal foundational ID.
Yes, please.
Excellent. Good to hear that. There were some questions on Slido. If I can remember them, because my Slido has gone blank. What type of leadership and institutional consensus led to the global success story of NIBS? And the Nigerian sector has many stories of inefficiency.
Thank you very much. I don't know what the author meant by inefficiency within the public sector, but to speak to the NIBS efficiency, NIBS was a product of necessity. 32 years ago, all the banks came together. I mean, today I hear most countries say they got insight from one country or the other. There was no reference table for us. A group of people sat down and decided that something has to work. And then 32 years ago, they put NIPS up there. And then when you talk about the leadership, you are accountable to the entire 1,000 connecting entities, right? And the central bank have regular oversight on what NIPS does. And then we also provide this service to the governments and government agencies. So you just have to be at the very best at every given time. And you are dealing with financial services. Customers are active and dependent on all the services. So it makes the game quite, you have to be on your toes to provide the excellent service required.
So I've seen with many other banking associations where banks own the switching infrastructure, it's very difficult to get consensus, and the big banks try to push out the small banks. I don't know, because I've been part of those kinds of fights. In Nigeria, is it because the central bank chairs the banking council? That is that the magic?
Well, I think in some countries have actually asked me this question, and I say, looking at the NIBS board composition, there are 9 banks sitting on the board representing the interest of all the other players within the ecosystem. And once you are in there, it's like a conclave where you think not about yourself, but about the ecosystem. But to be honest, I think the fact that the central bank deputy governor chairs the NIBS board has given it that nationalistic view. So it balances whatever interest and look at the general interest for the government, for the ecosystem, and so on. I think that plays a very major role in terms of the success of NIBS.
Thanks for that. It looks like we've just hit the zero on the clock. I would really have loved to have gone through those questions, but if you have any questions for the panelists, could they approach you afterwards? Thank you. And so I would really like to thank the panelists and speakers. It's been a privilege to host such an august panel. And this is kind of the dream panel that I would really love to interview each of you sort of for an hour or so, given the opportunity. But great. Thank you very much for your time and for your expertise and for sharing that with us. Thank you. Thank you. Thank you. Thank you very much. I call on to round off this session, Vera Neubauer, and she's from Senfrey. She's a senior associate, and she's going to go through a piece on reflections on the regulatory best practice.
Thanks, Barry, and thanks to the panelists, and in general, I think all the presenters that have shared so much expertise throughout the conference. I've really enjoyed the experience so far. And I think we heard a lot about the great systems that have been put in place, how much talk is already there about interoperability, and also really seeing how the central banks are working hand in hand with the national identification authorities on developing these systems. But I think one very important component, in addition to the systems and really as a foundational layer, are the regulatory frameworks that really build the assurance and trust and also nudge and push even the financial sector for moving more towards eKYC and leveraging digital identities. Because I think despite all the progress we have made, if we're walking into a bank or if we want to open an account in many of the countries, it's still a lot of paper forms. It still often requires physical documentation and is an onerous process. So I just want to share some reflections on that. Next slide, please. So we worked with Africa Nanda on a status of instant and inclusive payment systems report. And just as a small piece of that, we looked into eKYC regulatory frameworks across the continent. And I think the good news are eKYC, or at least elements of it, are enabled in all of the 21 countries that have instant payment systems in place, which is, I think, really great news. But if we look more into the full value chain of eKYC being enabled, it's not the case yet in all of these 21 countries. And what we looked at is, can you submit your information digitally? Can you use a digital credential? Can the credential be verified through digital means? And can this all be done in a remote setting? Next slide, please. And what are some of the gaps that emerge when looking at it? And what are some of the learnings I want to share? And I think there are three core pieces to it. First one is the risk-based approach. And I think the panelists and Barry have already quite a bit alluded to that. But I think here it's just quite important to keep in mind that, and there was a lot of discussion around it yesterday, not everyone is already enrolled in digital identity systems. Not all of the countries have seen successes like Malawi, where everyone is enrolled in the system. So there are still people out there without having these digital identities. There are also foreigners in the system that are not part of it. So having flexibility and really leveraging the risk-based approach to also serve those that are maybe not part of digital identity systems yet is a really critical element. And what helps with that is if the regulatory framework moves away from inputs more towards outcomes. So it moves away from saying, you need to bring exactly this identity card, you need to bring proof of address, you need to bring these other documents, towards saying, we trust the financial institutions to implement measures that are risk appropriate and that mitigate the risks in a responsible manner. And really looking at the controls they put in place and whether you, as the regulator, are satisfied with these controls in place. So moving away from just saying, okay, so they got the ID, they got the proof of address, that's foolproof. Job done, but rather moving towards, okay, for this particular customer, given the risk level, have they collected and verified the right things and have put the right KYC measures in place? Because I think we really want to avoid that those very low risk customers that do small transactions, that do minimal usage of financial products, get excluded because it's a blanket approach. Everyone needs to bring exactly the same things on the table in order to deal with financial services. And the other part of that is also, if we're thinking about digital identity system adoption, card readers, biometric devices, some of these can be very costly, especially for the smaller financial institutions to adopt and integrate. So again, thinking through what are maybe some other measures they then can put in place in line with their customer profiles that they serve, where it might not need these very, very high assurance levels that some of the technologies give. So really aligning the assurance levels that in the KYC process with the actual risk levels that the institutions see, and giving that flexibility. And we see that, for instance, in South Africa and in Mauritius, where there is a lot of flexibility, and it's up to the institutions themselves to define these processes. If we move to the next slide, please. I really liked earlier when it was said the regulators are also change makers. And I think in addition to having these regulatory frameworks in place and giving flexibility to the institutions, there is this really important role for the regulators to promote the change and to engage with the institutions to really facilitate the adoption of electronic KYC processes. Because what we often see is that these financial sector institutions over comply with regulatory requirements. They don't really want to push the boundaries of existing regulatory frameworks. So they just stick to what they used to. They stick to paper, they stick to manual processes, because moving into the electronic space, they don't feel that comfortable with. It seems too risky. They're afraid maybe of getting fined. And often also the regulatory frameworks in place are still kind of written in a world that was very physical, documentation based, right? So while it might not actively prohibit the use of electronic documents or electronic credentials, it also doesn't really enable it or explicitly says, it's okay to use electronic documents. So I think there's an important role for regulators to really enable and clarify how electronic technology can be used in the KYC process. So, for instance, I think Zimbabwe in their framework says specifically documents can also be electronic documents. And just a small thing like that gives more clarity in what can be used. Another issue we see with remote onboarding, that it's often classified as high risk if you have the remote interaction. But I think actually we see more and more, if you rely on physical interaction and physical credentials only without digital verification, that is actually the weakest link. That runs you a lot of risk. So I think while the inherent risk of not directly seeing the customer might be higher, if you put the right technology in place, the risk that you are left with is probably lower than just a physical inspection of a document. So I think really, again, guiding the institutions around that. I think Uganda also has put some specific remote onboarding guidance in place, can just help to push the financial sector more towards that, and to have conversations where questions can be asked. We have worked with, as Barry mentioned earlier, with IFED on remittance service, with remittance service providers on KYC innovation. And one of the ones was just that they take a scan of the ID document, and if a customer comes in again, they don't need the physical document, but the scan can be leveraged for certain types of transactions. And there's then often the question, but for a repeated customer, can I actually just use a scan of an ID? Is that enough? Also from the regulatory perspective, it's often not clear in the frameworks. So then institutions don't want to move ahead with it because they fear they're going to get fined. So if the regulator's in the room and can clarify these issues, it's just really helpful. And the last and the other role I think regulators can play is also in accrediting solutions and databases. So while I think it's not ideal to prescribe, you can only use this technology, you can only use this database, the regulators can play an important role in saying, with these providers or with these databases, we think, they give you the right assurance levels for KYC processes. So for instance, Egypt does that already for eKYC providers, that they accredit them. And then the financial sector feels obviously a lot more comfortable and assured in relying on these providers because it's accredited by the regulator. So I think there's really a critical role that the regulator can play beyond just the pure regulatory framework in providing guidance, issuing, and direct engagement with the industry to really foster that environment of innovation and saying we as the regulator are embracing innovation and we want you as the financial sector to move forward. We're going to be in conversation with you whether these innovations obviously hit the mark in terms of the assurance levels that we need to keep the financial integrity of the system, but we want you to move a bit away from what you are currently doing. Next slide, please. And then the third aspect is around data sharing. And I think I'm going to keep it quite short. It has been discussed a lot. One important element, just where clarification is often needed, is third-party reliance. So a lot in the eKYC space, a financial service provider will rely maybe on a technology company to do elements of the KYC process. So how exactly can the data sharing happen there? What are the provisions? There's often a bit uncertainty still around that. The other one is also that the identity database, the national ones, are often designed primarily for public service use. So there's often a bit uncertainty around how can the financial sector actually tap into these databases, under which provisions, and how can we move into a scenario like Malawi is currently experimenting, where it's not just binary responses, not just yes and no, it's actually pulling data out of the database. And if you can pull data out, that's where you get a lot of efficiency gains. That's where you get a lot of inclusion gains, because people don't need to fill out forms anymore. So it reduces a lot of the time, and it doesn't exclude people that are uncomfortable or unable to fill out these forms. And I think the third element, as we heard also from Lesotho, is really the cross-border element. A lot of transactions are going cross-border, and how should the data sharing happen there? How can also different providers, so if it's a regional bank and there's one branch in Kenya and one in Uganda, how can they rely on each other's processes so that if the same person walks now into the branch in Uganda and has already been onboarded in Kenya, doesn't need to go through the whole process again, so that reliance, assurance levels, and the data sharing in the cross-border context. So just to I think wrap things up, it's really important to have flexible regulatory frameworks that also accommodate really for those low risk customers that might not bring all the credentials on the table that are currently in the legislation, and to really give flexibility to include those in the systems, and for providers to be flexible around what they can do in the KYC process, to be a change maker, to guide institutions and to push institutions towards eKYC, and to put the right data sharing frameworks in place. Thanks a lot and have a good afternoon.